Hey guys, Michelle Massio here. Thanks for joining. I want to do a quick video on putting in a conditional order. So it's super important when you are long stock and then short a covered call. You really should have a stop in place on your long stock because you don't want to risk too much on any one position. It's easy to make money and it's harder to not lose your money, right? So always have a stop. We're going to go through an example here. I'm going to just grab my chair here. Give me 1 second. Okay, cool. So I'm going to share my screen and I'm going to go through an example. Share. Okay, I think you guys can see my screen. And we're going to look at Zoom as an example. Okay. All right. So currently I am long 600 shares, as you can see right here. My average price is 350.274. Right now it's trading at 343.49, right? So I do have a stop in place at 336. You can see where your stop is, or you can adjust your stop in a couple of different places. So first of all, in your bottom left-hand corner, you should have, and you can always customize this. So if your screen doesn't look like this, you can make it look like this by several of the, adding or editing fields. But you should have orders, trade, summary. That's the best thing. I think that's how I have it. You can pull up your orders to see where your Zoom order is. Now, the disadvantage of doing that, you can't, if you have a bunch of things, you can't sort it. Like you could click on this, but it's not going to sort it, alphabetically. So it's kind of, I find it harder to find that way. So I go into the classic. So that's mosaic. I go into the classic. So you see on the bottom left here, classic, you can go into pending, right? And if you click on the financial instrument, you can sort your things. So you'll see Zoom will come at the bottom because Z, right? So I see I have a stop, sell, 600 quantity, GTC good till cancel, stop order, and the price is 336, right? If I wanted to edit that, I can just click into this and I can edit it, you know what I mean? And then I can just hit this. If I change this number, let's say it was 336. If I change it to 330, this will say update. I don't even know what it says. Something update or something like that. That will update your price. Okay, so I'm gonna just click back to it. I think if I just click back to it and then go back in. Oh, I just got stopped out on my Amazon. Okay, let me do one quick thing real quick. 336. Okay. I'm going to finish showing you guys in just 1 second. I had this Amazon that I kind of messed up earlier. Let me buy back my call. See, I was long shares and I was short a call and I don't want to be naked a call. So I'm going to buy it back. Buy it back at 22.85 mid price. And hopefully that fills pretty quickly. Oh, now it's kind of going back up again. I sold it at 34.32. Oh, now I filled. Okay, cool. Let me go back to where I was going with this. So here's my point. Okay, so I'm long 600 shares of Zoom. I'm short these calls. Now what happens is if I get stopped out automatically, ideally I should buy back these calls electronically, automatically, not manually. And the reason for that is, I mean, none of us want to like stay glued to the computer screen, right? What if we're doing stuff? And what if the market like goes down significantly? So here's the risk. What if the market goes down, stops you out, and then bounces back up before you have the opportunity to buy back your calls? Then you're naked calls and you can lose more than you thought you could. So really, ideally, the conservative strategy is to have a conditional order to buy back your calls if you get stopped out on your long stock. And I'm going to show you how to do that because it's super easy. I don't know how to do it with other platforms, but I do know how to do it with Interactive Brokers. So I'm going to go to, so here's my orders here, my 350 call, my 355 call. I'm going to go to Classic, right? Wait, where's my stop at? My stop is at 336. I'm just going to remember it by typing it in the calculator here. 336. Okay. I'm going to go to Classic, and then I'm going to go to Portfolio. So that shows where my what my positions are. And then I'm going to do the first one first. I'm just whatever shows up first. My 350 call. I'm on a Mac, so I'm going to control click it, or if you're on a PC, you're going to right click it, and then you're going to go to Order Ticket. Okay. So this is my 350 call. I'm going to buy back, and I have two of them, right? Two quantity. So I am going to buy two at the market. And then I'm going to put a condition in. So that's basic. So I'm going to put a condition in here. I'm going to add, right? Price, next, underlying. We're talking about Zoom here. So I'm going to ZM, and I'm going to click enter here. If Zoom goes under or equal to, now my stop is at, where's my stop at? 336. Now I don't want to put 336 here because here's the way stops work. If you have a stop typically, and there's a couple different ways, but usually the way I put a stop on the board is if my stop is at 336, once it hits 336, it's a market order, right? So I'm going to put a price in at 335.99, meaning that if Zoom hits 335.99 or lower, it's going to buy back my calls. I'm going to show you in a moment. Let me go to finish here. So 335.99. So I'm going to go to a penny underneath my stop. Follow? I'm going to go to finish. Now I'm going to make this a GTC. So it's always going to be good till cancel. So let's just check it, right? I'm going to buy two at the market. I'm going to go into my condition. If the default price of Zoom, the underlying, goes under or equal to 335.99, it's 1 penny below my stop price. And then I'm going to hit transmit, right? So transmit submits the order. Okay, so now I have that working order. Now you do want to keep in mind that if let's say, I don't know, let's say, you know, the price goes back up or something like that, and Friday comes and I'm also short calls, and let's say my long shares get assigned, right? So I end up, my shares leave my account, I end up selling my shares. I need to manually cancel this. So with Interactive Brokers, I don't know about other platforms, but Interactive Brokers, these are never going to be orders that are either like buy to open or buy to close, sell to open, sell to close, or something like that. They're just a simple buy or sell order. So what happens is if you don't manually cancel that, you're gonna go long. You know, it's gonna be, it's not applicable. You don't need it anymore because, you know, the call will have, you know, gotten assigned, right? So you don't need the stop in place. So you have to manually cancel it. Same thing with stops on long stock. Let's say I'm long Zoom, right? Let's go to Zoom. I'm long Zoom and I have these calls, right? And let's say it goes up and Friday comes and the shares get called away. I have to go in there and cancel my my stop order. So you have to do that manually. If you don't do that and the price dips down and goes down, you're gonna end up shorting the stock and you didn't even realize you were intending to do that. Okay, so that's important. Anyway, that was kind of easy, right? Quick and simple. Make sure you do that on all your positions. I'm telling you, it's easy to make money and it's harder to not lose your money. So the more you automate things, the more you make things electronic, the better you are, because you don't want to be glued to the screen. What we want to do is we want to create the ability to have a laptop lifestyle, and we want to create the ability to do that like on our terms, right? So we want to be able to, like, I go for a walk for 45 minutes in the afternoon. I'm not looking at my phone and seeing where my stocks are. I don't want to be freaky about that kind of stuff. I want to be mathematical and have my positions on here, and I know I'm going to make money. I'm down a tiny bit today, but it's okay. It's all good. And I'm paying attention to how much premium I'm selling. So, you know, your NAV, your net asset value, or your liquidation value, and it's going to fluctuate based on where your positions are. But the premium you sell, how much income you take in, that's the important thing. So today I took in over 25K in income. This particular account is like 1.3 million. So that's what's important. That's really what you want to focus on. So even though I'm down today, let me see where I'm at. Portfolio. I always try to, like, okay, where am I at for the month, right? So I'm up 3.13, even though I'm down a little bit today. It's all good. You know, you're going to go up and down. The market doesn't go like this, right? So that's normal. That's to be expected. What you want to do is just keep your risk in check and don't take big losses. You know, I have some realized losses today. I got stopped out of a couple things. It's all good. You know what I mean? Because sometimes you're not right. And what we want to do is what we're doing is we're putting trades in mathematically. So if we could be wrong a whole bunch of times and still make a lot of money. Just keep your risk in check and don't lose too much on any one trade. Anyway, I hope this helps. And hit me up if you have questions, and happy trading. Happy Monday. Bye.